get more from those market movements now. We've got Gary Booysen from Rand Swiss standing by. A very good afternoon to you as always, Gary. I mentioned in my market intro there that the JSE ended the day really impressive, over 2% in the green, and we saw some gains across most of the major indices. What would you say were some of the biggest drivers of the movements that we saw today?
So the financial index was only up 1.7%, and that was only up 1.7%. Every other index on the market up well over 2%. The resource index almost up 3%. I think this is coming on the back of I think just nerves settling, over the civil, or at least the unrest that we saw in China earlier in the week, and the idea that while we do have rising COVID cases, the widespread protests that I think had a lot of traders and a lot of market participants nervous are being brought under control. Looking at it, we can see it in in our big, if you want to call it, Chinese stock, the likes of Nasdaq up 6.1% this morning, rallying hard, in China as well. But then it was all resources, which is also kind of feeds into the China story. So the likes of Amplat up almost 6%, Impala Platinum up over 4% as well. So I think that is partly to do with it. I think everyone is waiting to hear what Jerome Powell has to say this evening as well, before the Fed goes dark ahead of that, the potential interest rate announcement, or at least the 50 basis point increase that we're going to get in December. But then another positive sign that came out today was obviously the Eurozone inflation, which came in at 10%, still very, very high, but ahead of expectations, and just yet another sign that we're seeing inflation starting to slow, and that just helped to fuel the optimism that drove markets higher.
Yeah, no, absolutely. Of course, you would have seen Elon Musk weighing in on the interest rate debate in the United States, calling for the central bank there to cut interest rates immediately to avert a global recession, or a recession in the United States anyway, Gary. What are you seeing in terms of the local unit, as well as the price of Brent crude? I suppose the developments in China would have contributed significantly to the price of Brent today. But generally, what are you seeing there, short to medium term, combined with the local unit, which has remained quite resilient over the last few days?
So if we start with the oil picture, you remember we've got the OPEC meeting this weekend, so they'll be meeting on Sunday, and there's, I think, a lot of rumors churning in the market ahead of that weekend meeting. So we do have oil prices up a little bit, Brent crude oil trading just above $86 a barrel at the moment, and I suppose this is on speculation that there could potentially be an output cut from OPEC Plus, which obviously includes Russia. You take supply out of the market, and obviously that's going to force oil prices up a little bit higher. It'll also put pressure on on headline inflation numbers, which obviously drive up energy costs and just affect everything. So two sources are saying that we could potentially get output cuts. A lot of people hoping that they'll leave it unchanged, but we'll have to see what happens over the weekend. As I said earlier, Jerome Powell is speaking tonight, and then the Fed communication essentially goes dark until the 15th. But we do obviously have the non-farm payroll numbers on Friday, which was going to give us a better sense of what's happening in the labor market. But we did get ADP numbers, the private payroll numbers, out this afternoon as well, and they showed a little bit of weakening. So it just shows that those interest rate increases are working. They're acting as they should to slow the economy, stop it from overheating, and that's a very positive sign for markets, which I think have largely priced in the job cuts that we're seeing from so many of the big, let's say, the big US firms that have been announced in the last couple of weeks.
We had updates out of Santam and Fairvest, Gary, but we'll leave those for now because I want to ask you about Tongaat and small-scale growers gathering together, forming a consortium to buy the assets there. Do you think that this is potentially some positivity for Tongaat Hulett, given that it seems as though the business rescue process has been a severe struggle for them, and they're dealing with the court cases from the accounting irregularities that were uncovered?
I don't know if there's too much hope for Tongaat Hulett shareholders, but I think it's incredibly optimistic for the region as a whole. So this growers consortium, which represents about 5 million tons of sugarcane, is clubbing together to essentially buy assets out of Tongaat, and just keep the sector going. The plan that they've put in place, and it's obviously got a lot of regulatory hurdles still to clear, could potentially save up to 20,000 direct jobs. But then obviously there's all the subsidiary businesses that rely on that as well. So it really is a plan to save the region. And what they're planning to do is buy out, some of the SA mills, the refining capacity, animal feeds and brands businesses, everything from Maidstone, Felixton mills, and essentially, this is going to be a new company, but they're currently putting together the financing and the structuring to take those assets and just try and save the whole sugarcane region in that northern KZN area.
Absolutely. Thank you very much for your time, as always, Gary Booysen. And I think you and I will only catch up next year. So do enjoy the festive season, get some well-deserved rest, and we'll catch up next year. That is Gary Booysen, Director and Portfolio Manager at Rand Swiss, joining us this evening.